you're addressing, and the way you're addressing is scalable, and you have already proven yourself both from the technology and the market side. Only then you should approach institutional investors. And of course, they will look for is how big of a problem you're solving. That is very essential. That when the moment we talk about institutional investors, these are guys who are not going to fund a kirana shop or a neighborhood idli vada stall or something. These guys are looking to deploy large amounts of money to solve a large enough problem to get a very large multiple. You see, large, right? So a good institutional investor, there are institutional investors who will invest $1 million to begin with, but typically like your Sequoias and Excels and Lightspeed and all, they look to deploy hundreds of millions of dollars in a company over the life of the company. So they want to see how big of a problem you're solving so that they can constantly invest money in your company and to build the next unicorn, or double the size of unicorn, and so on and so forth. So that is very essential to understand, that if your startup is not of that size, not solving that big of a problem, if you're just a YouTube channel, or if you're just a as I said, an idli stall. An idli stall trying to build 100 idli stalls, that could be an idea worth looking at, but not otherwise. So make sure you have of the size, or scale rather, not the size, of the scale, your ambitions, your dreams, your business plan is going to scale to that level before you approach an institutional investor. And then you have proven yourself in terms of whatever product you're doing, whatever model, and you have proven your product, you have proven your business model, customer need that you understand. Only then you should approach them. So these are the things: a large enough problem you're solving, you're addressing, and the way you're addressing is scalable, and you have already proven yourself both from the technology and the market side. Only then you should approach institutional investors. And of course, they will look for founders who have been there, done it, or if it's the first time, they at least have proven themselves through the cycle of this startup that they can actually do it. They understand the market and the customer and the product, and they can actually do it, and they can. And in all this, being genuine and authentic helps. But having said that, we all know all the problems a bunch of startups both in US and India faced, where founders turned out to be the arrogant, I don't want to use the word, to be fired later on, and all that stuff has happened. But I'll not go into that, but at least in the beginning, when you're approaching them, your genuineness, your authenticity, your transparency will help in the process. And of course, always, even crooks can raise money by fooling the investors. It has happened. We all know about Theranos. If you can look up that, Elizabeth Holmes, she raised billions of dollars, and she didn't have anything. But I will not, let's not talk negative things, but these things happen. But for a good founder, for a good, honest, genuine, authentic set of people, funds are there, provided you follow what I mentioned. Thank you.